welcome to this edition of Decoding Real Estate. I'm your host, Michael Banovac, and today we're going to talk about the pandemic. We're going to talk about ways that it has affected the Arizona real estate market, and also ways that you may be able to profit from both real estate and or stocks during this time of uncertainty. Now, before I begin, I just want to let you know that here's a disclosure. I am a licensed real estate professional. I personally invested a lot in money into real estate, but I am not licensed in the stock market. This is just my personal opinion. Do not hold me to this, but I have done very well doing this, and this is what I'm doing currently now. What we're seeing right now is a transition in demand. The demand is definitely now on the buyer's side. Now, what does that mean? Well, what we're seeing, especially in the luxury space, is new construction, new build is still in demand, but we're also seeing money tighten, especially on the high end. So with that, a lot of the in-betweener homes, those homes $1 million and over that aren't brand new, that aren't in demand as far as style, are languishing on the marketplace, and they probably will continue to do so for another year and or beyond. Now, as we move down the price range, we're seeing still demand under the conventional level. That will be a very interesting market to focus on, and that's kind of the market I want to focus on now. So a little bit about my background. Currently, I have $6.2 million in escrow. So I think as a real estate professional, we're really trying to keep those deals together. That's our main job right now, as we all work from home, as we all take into account our health, the health of our loved ones, and the overall issues that are associated with the pandemic, as well as the unknown. We want to breathe life into these deals and make sure we can carry them across the finish line. What am I doing personally? Well, since I was 22 years old, I started buying houses. My whole deal is I would buy a house, live in it for 2 or 3 years. Instead of selling it, I would rent it and then have that rental income, pay the mortgage, and then buy another house. I've been doing that since I was 22, so for 8 years now. I've accumulated a lot of homes doing that, and I'm going to continue to do so. And right now is a huge opportunity for the next 6 months to a year, as we're seeing more of a buyer demand. So sellers in the past 2-3 months have had a lot of leverage. They've had the ability of a strong demand for their product. They've had the ability of low interest rates and people wanting new product. What we're seeing now, which is very interesting, is we're still in a low inventory environment. Inventory is slowly creeping up. It will probably continue to do so. And for the next 6 months to a year, buyers have the ability to leverage their cash. If you have $50,000 or more sitting in an account, and you have the ability to borrow for a primary residence right now, you have a huge opportunity to double your money rather easily in the next 2 to 3 years. How? Well, the first thing, conventional rates are at 12-year lows. Yesterday, I was talking to one of my mortgage friends. He was telling me with a 1% buy down on your 30-year conventional loan, you can get a 3.125% loan. Now, if you put that $50,000 to work as a down payment on a property with a 3.125% loan, and you carry that loan for perpetuity, hopefully, your ability to double that money will be extremely valuable in 5-10 year period. Do I believe home prices will go down? I do believe so in the next 6 months to a year. But there is still strong demand for new product and product in great areas. Now, what should you be looking for in this conventional space? First thing I'd be looking for is location. So when I search personally for myself, the only zip codes I look in right now for myself, because I enjoy living in them, is 85016, 85018, 85253. That's it. It's a very strategic dynamic of where I want to be and where I foresee prices remaining strong. So when you're seeing a tightening on the financial markets, what you're going to see is buyers have more leverage, not necessarily to steal a property at 30, 40, 50% off. I don't foresee that happening. But what I do foresee is buyers have the ability to save 10, 15, 20% off market and also negotiate terms that help you keep your cash on the sidelines. What do I mean by that? Well, let's say you put 10% down on a conventional rate on a home that you want to buy, and you can negotiate 1 or 2 point seller concessions that you probably weren't able to do 2-3 months ago. So that'll help you keep your cash on the sidelines for remodeling, for value add investment, also paying down your mortgage, things of that nature. So huge opportunity in the space. If you'd like to learn more, you'd like to learn about what I'm doing in the next 2 to 3 months to acquire another property, feel free to message me or DM me. I am not a licensed stock professional, but during times of uncertainty and during times of stock market fluctuation to the downside, there's huge ability to make money in the stock market if you do it slowly and if you do it incrementally over time. So what am I invested in? Well, I don't hold a lot of individual stock investments, and the reason I don't do that is because I think in the next 6 months to a year, many of these companies will be wiped out. There's no doubt about it. With this tightening of fiscal policy, many of these companies won't survive 6 months to a year. But let's take the S&P 500. The S&P 500, all those companies, if not a majority of them, will last through this crisis. When it ends, no one knows, but most likely they will last. And so what I do personally, if you don't want to put a lot of money to work, these work well in a highly fluctuating environment if you kind of know what you're doing. 2 funds I would look at: SSO, which is double levered S&P 500 to the upside, and I'd look at UPRO, which is triple levered S&P 500 to the upside. Now, the only time you invest in these stocks are huge down days like we saw in the past 2 to 3 weeks. Now, for SSO, I would only invest in that in small 1, 2, 3, 4% increments on huge down days. Because they are levered, these down days in the S&P 500, down 6%, down 7%, equate to down 14% or 21% in the triple levered fund. So on really bad down days, look at acquiring small stakes in these SSO, UPRO index funds. I'm talking very small stakes. And as they continually go down, if they go down, buy. If they go up, hold. It's very simple. That's all I'm doing. And I promise you, it will serve you well. If you have any questions, feel free to call me, message me, and/or comment below. Be happy to answer them for you. And again, in this time of heartache, in this time of disaster, with so many people's health and the losing of their loved ones, and so much uncertainty in the economic market, take this time not to sit and to worry, but take this time to plan for the next step ahead. And I promise you, it will be highly beneficial to not only you, but your family for years to come. Take care.